Hello guys, welcome back to today's lesson on weekly reach profile, and today we're going to be discussing second chart bullish Friday and also second chart bearish Friday. Now this looks kind of similar to the second chart bullish or bearish Thursday, where there usually will be some form of major economic release on Thursday, and the market will consolidate from Monday going to Wednesday, and that will be kind of like the Asian range for the week, whereby the market has neutrality in order flow. So neutrality in order flow essentially means the market is neither moving higher nor lower. And then what happens is, going into Thursday, there'll be some kind of run above the high of the week, initial high of the week, or initial low of the week, and that sucks in retail sentiment, just like we discussed in the last video. So that'll create a narrative in price, and that narrative in price creates a pulling of liquidity counter to where the initial run on Thursday occurred, and then the market just aggressively reverses going to Friday, and that's how you get your consolidation midweek to Thursday reversal. And with signature type profile, usually this usually occurs when there is a high impact release again on Friday. Now, I've mentioned that the weekly range profile is highly economic calendar dependent. Okay, so it is very, very dependent on the economic release for that week. Now, a lot of times this can occur during NFP week, whereby the market just consolidates from Monday going to Thursday, and then at NFP the market runs one level of stop and then aggressively reprices, or not even NFP necessarily, but a major economic release. Now the question is, how would you anticipate a week like this? A lot of times this will form when, number one, the market is at an higher time frame objective. So that's going to be if we've seen weeks of one-sided expansion, okay, there's a likelihood that the market is going to take a breather, and this is when one of these profiles can form. Number two, when we are in a neutral order flow. So if we're in trapped order flow, I've discussed trapped order flow already. Trapped order flow essentially is when the market is stuck between premium and discount, aka equilibrium. That can create neutrality. And I've talked about the market being at equilibrium. When the market is at equilibrium, delivery program is neither bullish nor bearish, because there's no displacement. We need displacement out of equilibrium to identify what the program is. Is the current program a bullish program, or is the current program a bearish program? If we're at discount, we can easily identify what program it is. Is it constantly going for sell stops? In that case, then the market is expanding from premium and is going into sell stops, and that's a bearish program, right? And if the market is expanding away from discount, we know that's a new bullish program on the way, and the market will go and seek some kind of primary array in the range and seek that as an objective, and we can trade that little small gyration of delivery from the discount all the way up into a premium. But with price being at equilibrium, it's neither at premium nor is it at discount, so it gets very difficult to decipher order flow. And what the market usually do a lot of times is the market will go into a small little squeeze, which we call consolidation, when the market is at equilibrium, and that would build liquidity or orders on both sides of the marketplace. And then heading into Friday, especially if there is a major economic release, the market will then aggressively run one level of stop and then reverse the opposing direction, and that's how you get your secondary bullish Friday. And then for bearish Friday, it's also the same play, but it's just on the bear side. Again, what's key here is that order flow for the week is neutral, so you're not anticipating a lot of displacement that week. This is for weeks where you're not expecting a lot of trendiness in price, okay, a lot of one-sidedness in price, meaning the market is just expanding from an high time frame, discount or premium. You're not expecting a lot of that. Okay, so on the weeks like this, the market will go into very tight consolidation, and traders will go in usually Monday going to Thursday, and then they'll get bid up by the marketplace trying to trade both sides, and the market just does nothing except frustrates both buyers and sellers. And usually when I see this, I wait until Friday. If there's no major economic release on Thursday, and I don't see any aggressive run. Now one of the characteristics of same thing with the Thursday middle consolidation into Thursday reversal, and also the second short bearish Friday. One of the major takeaway from this is that manipulation. So now I've not taught that yet, which I'm going to actually teach on the day trading course. But we're going to talk about power 3. Now, usually when the market is in a consolidation like this, when the market is in a consolidation, what the classic research textbook teaches you is that you want to buy the breakout out of the range, right? You want to buy the breakout out of the range and put your stops below the the low of the range, and that's how you trade consolidations. I'm saying this because 2017 going to 2018, that's all the textbook was teaching. I was a part of this training company called IML, and this is what all the educators were teaching and how to trade consolidations. So usually back then, what I'll do is I'll have pending buy stops above the marketplace, and then if the market run higher, okay, my buy stop will be triggered, and then my protective sell stop would be below the low there, or usually it will be both buy stops and sell stops. So if the market triggers one first, I'll collapse the other order and allow the market just to play out. So usually if it goes up and triggers the buy stop, it's not the buy stop order is not necessarily going to be just at the eye of the consolidation. It's going to be a little bit just above the eye of the consolidation, just so the market can, it shows willingness to expand, and then the market can pick that up. Or I could, again, this is what the textbook teaches. You could wait for the breakout of the consolidation and then the retest back to the range, which is all resistance on support. You can buy that. Now, this run higher is what we'll call the manipulation. All of the consolidation is what we'll call the accumulation. So this becomes the accumulation, this becomes the manipulation, and then smart money will use the buy stop orders here to pair against their sell positions and then run the other way. And all the retail who are going along here will protect the stop stops below this low here. They create available liquidity for institutions to be counterparty to a discount. And this is how you get your classic accumulation, manipulation, and then the run lower is what we call the distribution. And I'm sure you must have heard about AMD pattern. What's the AMD pattern? This is the AMD pattern. Okay, it's accumulation, manipulation, and then distribution. Now, this is classic for a daily range. When we get into daily range profile, we're going to discuss all these concepts and all these ideas, right? But this is not the lesson for that. But this kind of profile where the market consolidates, runs aggressively, and that's what the market usually would do. Run aggressively one way. That run aggressively one way is to convince retail folks that the market is going one direction, building liquidity on the opposite side of the marketplace, and then the market aggressively runs for the opposing direction. Now, that same concept there is the concept we apply to a second chart type profile for a second chart bullish Friday or a second chart bearish Friday. There is an helicopter right now, and the noise is loud. Right. So now with the second chart bullish Friday and second chart bearish Friday, the order flow for that week is neither bullish nor bearish. So your anticipated weekly expansion, again, our weekly profile stems from our weekly expansion. Okay, are we looking for a bullish weekly expansion or a bearish weekly expansion? And depending on what kind of delivery we're expecting, we can build a baseline anticipatory profile for the week. With USD CAD here, you can see very clearly the market is in a consolidation. So now let me ask you very clearly. If I just did something like this, if I went all the way back to before this week started, okay, can you see any clear order flow in the marketplace right now? Is there any clear order flow that stands out? We do have source of liquidity here. We also have buy side liquidity here. But looking at this delivery right now, does anything stand out in terms of price delivery? Does bullishness stands out in price? Does bearishness stands out in price? No, why? If you look at what the market has been doing over the last 3 months, again, we're looking at quarterly shifts, it's not really doing anything. It's neither expanding higher nor expanding lower. All of this price action has been inside the range of this low here to this side here. So what's order flow, or what can you anticipate the weekly order flow looking like? Do you anticipate it looking like a trending market condition for bullishness? No. Do you anticipate it being a trending market condition for bearishness? No. Even though the market has been making a lower low and lower high, all right, and you can see here we have the short-term daily high in place, and then the market runs above that. Now I told you in the bearish order flow, if we run above the short-term high, we should be aggressively expanding for sell-side liquidity. Just expanding, we should be doing so aggressively. Are we doing so aggressively expanding for sell-side liquidity? No, we've revisited the ODI we run out. So this is clearly neutral order flow. Why is it neutral order flow? Because the market has neither shown willingness to trade higher or lower. It's neither respecting primary nor respecting discount. It's validating both. Okay, this is a short-term sell stop here, which is discount. The market validates discount. Alright, if the market is validating discount, then we want to see the market respect premium, right? Does it respect premium, which should be this bearish block? No, it does not. Does it respect this bearish order block? No, it does not. Completely runs through them. Now you could say, well, we are running back up into this small little fair value gap. Well, how many times have we traded up into that fair value gap? Traded up there once. We had a run on buy stop inside a fair value gap. That's the highest probability to sell with a fair value gap you can get. The market should clearly want to expand for sell side, but it's not doing so. It means something fundamentally is going on. So that means order flow is neither bullish nor bearish. So you see, we've defined, and this is how you anticipate a weekly profile. So we've already defined that order flow is more likely to neither be bullish nor bearish because there's no clear delivery program we can see right now, and there's no clear liquidity pool we can identify right now. There's no assurance the market can go up into this liquidity pool. It could trade up here into this fair value gap and then sell off aggressively, and then we'll just run sell liquidity pool. At the same time, it could also just aggressively run for this bullish liquidity pool here from this down candle, which is bullish block, and that will be the same regardless. So whenever you have a 50-50 proposition, your order flow for that week is neutral. Okay, you're not expecting a lot. And in weeks like that where you're not expecting a lot, that's when you exercise patience. Because what a lot of you guys do is you have the fear of missing out on a setup, or you have the fear of missing out on a trade, and you go into the marketplace and you're rushing in to get a position on. That's what you're doing. You want to get that early position on. You want to trade that Monday, Tuesday, Wednesday, because you're excited about getting some profits. And I'm telling you, in weeks where your bias, your anticipated weekly profile is neutral, you stay out. You wait. What are you waiting for? You wait specifically for a manipulation play after the market beats in sentiment. So you're looking for the market to create a kind of range early Monday or Tuesday going to Wednesday, and then on Thursday or Friday you're looking for the market to run aggressively on one side. And then once the market runs aggressively on one side into an high time frame level of premium or discount, you can then fade that and then run the opposing direction, because that initial run for one side would have convinced retail to go one direction, and then we can use that to go the opposing direction again to profits. Now here, let's identify our high time frame levels. Here we have this daily fair value gap, which is purple line. So we'll always use purple line for this. The low of this candle is 1.34465. So we're going to utilize 1.34465 and 1.34465. That's the low of the candle. High of the candle here is 1.34175. And then we have all of these two down candles, which is a bullish order block at discount. So I'm not going to use the wick of this candle because the body of this candle is too small. This is our bullish order block here as discount. And now let's see what the market does. Let's look at the economic calendar actually. So on Monday with Canadian dollar, we have news coming out. Again, my time zone is Eastern Standard Time +6. All right. So this was before daylight savings time. All right. So it's +6. So this economic release is 4 p.m. And if I'm 6 hours ahead of Eastern Standard Time, that essentially is 10 a.m. Eastern. So that's a London close setup. So at London close, we had Canadian dollar numbers coming out, major impact. Let's see the outcome for Monday. Now you can see very clearly we have run higher into that old fair value gap. In the process, we have a short-term daily high here, which we have taken out. So let's identify that short-term daily high. That is internal liquidity. Do you go in and short this? No. Why? You don't know if this is going to just continue to expand for buy side liquidity. Do you go in and go long here? No. Why? Because you don't know if it's going to reverse completely from the fair value gap. So what I'm saying about neutral order flow, it's very hard to get a read on price. It's very hard to get a read on the program. And usually when it's hard to get a read on the program, what the market will do a lot of times is the market will build in sentiment. Okay, so it'll form a very tight squeeze and create a sentiment in the marketplace, and then aggressively run one direction, create sentiment, and then run the opposing direction. So let's watch this in real time using the replay tool, obviously. On Tuesday, what do we have that concerns our asset, which is dollar and Canadian dollar? We have a late high impact interest rate numbers on Canadian dollar at 12 noon. That's 12:30 p.m. Eastern. And then at 12:40 p.m. Eastern, we have an interest rate announcement on dollar. Okay, not an interest rate announcement on dollar, but essentially a bank statement on dollar from the Federal Reserve chair, which is Powell. So because these are two late, super late economic releases on Tuesday, and they're high impact, that should give us some massive displacement, right? Let's see. All right. The displacement was trained down into our bullish order block now. All right, so next question. Tuesday does not really offer some kind of massive displacement. Now, when we're in conditions like this, what do I teach you to anticipate? You're anticipating some kind of displacement, and then you can use that to gauge the program or order flow. If we're bearish, we want to see the market completely trade through this fair value gap, which will indicate a complete change in delivery state. If we're bullish, we want to see the market expand for this fair value gap and close above this side here, so we know the run above the side is not a torsive. Instead, that's a bullish program being delivered, and then we can aim for the buy side liquidity up here. But for now, all we have to contend with is all the speedy areas we're outlining. It's not clear at the moment. So let's continue. This would have been an economic release where we wouldn't expect a lot of, some kind of extreme volatility, but it does not. All right. On Wednesday, around 9:15 a.m. Eastern, we have FOMC members speaking. Now, this is different from the classic FOMC press conference and fund state announcement. Okay, this is different. But irregardless, that still is an high impact economic release. And then late in the day, around 1:45 p.m. and also 1 p.m. Eastern, we have a bunch of major impact release coming out. So now let's see if we get a major reversal on USD CAD. We trade down into the fair value gap, but we're still failing to expand above here. On Wednesday, no delivery. Now we're heading to Thursday. Can we see any major economic release on Thursday? Yes, we have unemployment claim numbers around 8:30 a.m. Eastern on dollar, and that's the only thing that concerns the pair we're trading, which is CAD. And then now let's look on Friday. Let's see what's going on Friday. On Friday we have unemployment rate. We'll also have employment change numbers, 8:30 on Canadian dollar, and then around 11 a.m. Eastern, or sorry, around 10 a.m. Eastern, which is London close, we have consumer sentiment on dollar. Now, looking at the economic calendar between Thursday and Friday, which do you think has more probability of seeing displacement? Is it Thursday's economic calendar or Friday's economic calendar? Obviously, it's going to be Friday's economic calendar because we have news, high impact news, which is unemployment rate, which is just similar to NFP for dollar. We have that news coming out on Friday for Canadian dollar. So that should offer some kind of volatility. So we can skip out Thursday, right? You can see Thursday trades down into bullshit block, heading to Friday, and understand that, okay, what we're looking for, and we're gonna remove the fair value gap because it's not doing anything. The market clear is not respecting that because it's in a neutral outflow. Now, this is also another takeaway for you guys. When the market is in neutral order flow, it will not respect high time from discount or premium. It will look like it's violating those levels. Now, initially, it will respect them a little bit, and then as it starts to trade around those levels more, the level starts to dilute, meaning the sensitivity of those levels starts to significantly reduce, and it looks like the market is not respecting them. So whenever I see the market is neither respecting premium nor discount, that is classically a tight squeeze, and those are one of the difficult conditions you can trade because the market will just only run stops on both sides, and it looks like the market is not respecting any premium or discount. Well, that's because the program in the algo is run stops on both sides, increase sentiment. So if we start with Monday's delivery, you can see in Monday's range we have a run higher, and that run was for this buy stop up here. I'm going to use the rejection block, okay, because the body of the candle there. On Monday we run for the rejection block of the high from the previous week, and then on Tuesday we get up there one more time and then slime down hard around the lows for Monday. So if you're buying on Tuesday, you're stopped out. If you're selling on Tuesday, you're stopped out initially. On Wednesday, we have what retail will consider a break below structure. Now, let's sell short that break below structure. If we're going to sell short the break below structure, what should we do in terms of stops? We're going to put our stops above here. We're going to put our stops above here. Guess what the market does? Look how quickly it runs for buy stop. But watch, it has not broken above the initial high of the week, okay? And the initial high of the week is the bodies here, which is what I'm using. Again, I'm not using the wicks of the candle, I'm using the bodies of the candle. So on Tuesday, you can see it runs up above that candlestick, that rejection block, and also up into that previous week's high, and expands lower. Retailer buying the lows here. Market aggressively squeezes them the opposing direction. If you're buying here, the market aggressively runs and squeezes the opposing direction. If you're selling any retracement here, the market aggressively runs and squeezes you the opposing direction. Can you see how frustrating this is to trade? If you're trading in a condition like this, you would take a lot of losses, especially if you don't know what you're doing. If you don't know what you're doing, you go into the marketplace and expecting a lot from price. The market will not offer you that, and then you take a lot of losses, and then it'll cause you frustration. You probably lose your composure, and for a lot of people who have a very poor market psychology, they would have multiple blown accounts. Okay, failed challenges. They would have blown your live accounts for some reason, and it's all because of this kind of price delivery. Now, heading into Friday, because we already know that during New York session going to London close, we're more likely to see a displacement because the profile now clearly indicates seek and destroy bullish, bearish profile, or bullish profile. Now what we're looking for is we're looking for that run, aggressive run one side, Thursday going into Friday. So we're looking at that late Thursday going into Friday, which would be the jitter swing. So jitter swing is essentially the manipulation phase, and all of this price action would have been the accumulation phase of the week. Remember the AMD model I taught you just now? Accumulation, manipulation, distribution. So let's use the replay tool. You can see we're stalling here. Now everyone thinks, okay, we're now going bullish. Institutional traders like you guys, you're gonna look at this as, oh, this is a breaker block. So we're looking for displacement higher. Now we have displacement higher from the breaker block. Good. Now, what are we looking for? If we've seen displacement from breaker block, we want to see continuation higher, correct? Oh no. We ran lower. Ooh. After doing what? Trading above the high from the week, where retail will be piling on longs because it is Friday and they were not profitable all week. So they want to get something on Friday. They want to get that breakout expansion on Friday. But what can you see in the process? We have a low resistance liquidity run on the sell side. So what profile is this looking like? Seek and destroy bearish Friday. Alright, let's see what the market does next. We have a small little fair value gap up here around London session, expecting displacement away from there. Watch out, it still is inside the fair value gap and the old breaker block. Now I've taught inversion levels, right? And now you've seen me use it a lot of times, frequently, especially lately in our live sessions, where I'll tell you when to expect a breaker block to fill and to use that breaker block as an inversion level for an idea, because that indicates a change in leverage state. So all I'll simply do here is I'll go in there, I'll short the run, the retest of that breaker block, because it's no longer a discount array, it's now a premium array, and my stop goes just above the breaker block, and I'm targeting sell side liquidity, obviously, right? And we're looking for displacement. None of this, I'm not worried about none of this, okay? I'm not worried about any of that. And you get displacement when? Right around or prior to the unemployment rate numbers on Canadian dollar, and it slams down hard. Boom, 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 boom. And you can see it runs for objective from that level. Now here it looks like it traded through the fair value gap. Reason why is because, and that's why I was not going in there to take any kind of trade. Reason for that, when it looks like, oh, it traded through the fair value gap, when we are in neutrality of order flow, the market usually will not show precision of delivery from inefficiencies a lot of time. Okay, a lot of times it will not show that. Like here, for example, if you look at Monday, you would expect this run lower should run out to clean us down here. It does not. And then it runs below the low here. It does not run below the low of this week, and then expands higher for the rejection block. And you can see here we're making short-term high, and run above the short-term high one more time, and then start to expand lower. So if you are looking for that precision delivery, just like you look for in your classic, trading, a lot of times it might not really offer you that. You might get a lot of slippages, and you might get a lot of time. The timing is not going to be as accurate as you used to. So meaning you could get moves occurring during the year close, when classically we don't trade near close. You can get moves occurring during London launch. Alright? Some of the moves you're looking for will occur during London launch. And the classic jitter swing you're looking for during New York session typically might not even form because order flow is neutral. Okay, so this is gonna wrap up signature bullish or bearish weekly profile, and the final one would be the Wednesday weekly stop and reversal, and then we're gonna go into lesson 3 for the short-term trading module, which is the market maker manipulation template. So I'll see you in the next lesson. Trade safe.